Hi economist. Now we will apply the activity-based costing on a restaurant example. Activity-based costing is a costing methodology that assigns a cost to activities and then allocate these costs to the product or service or customers. All these are called cost objects, whose are allocates with cost based on their consumption or demand for those activities. Cost drivers are essential pillars of the activity-based costing system. Cost drivers are the measure of consumption, for example, weights, lengths, time, and so on. Cost drivers are what cause cost to be incurred. In this restaurant example, cost drivers are gigabyte data handled, ordered items, minutes to cycle, minutes to close purchasing deal, minutes to serve an employee by HR, kilogram weight, guests attend our restaurant, mileage driven by our delivery, heads count of employee, order displayed on the screen. The cost accounts, though share the same cost driver, they are grouped in what's so-called cost pool. So, cost pool are cost accounts grouped together based on their common cost driver. For example, the chef chicken is a group of cost accounts related to this kind of labor based on his minutes to cycle, meaning minutes to cook the customer order. All accounts related to that labor driven by this cost driver, minutes to cycle, are grouped in one cost pool, and this cost pool is unit level cost. It means this cost pool is a direct cost of the production. It is a kind of cost that can be traced in each produced unit. Prime costs are both of direct labor and direct materials that made the product, and they are part of cost of good manufacturing. Also, the cost of production includes the overhead. Overhead are indirect costs. Those cannot be traced to each produced unit, but they are mandatory to the production process. For example, the amount of fuel of the machine that made the produced unit. Costs like inventorying or purchasing or packing or cleaning are examples of costs. Those serve more than one produced unit, so they are called batch level costs. The cost of corporate functions, those serve themselves and serving other departments, are called shared costs. In this example, those are IT, purchase, fixed cost of HR, and variable cost of HR, Human Resources Department. Pool COP cost. COP means close of business, the result at the end of day. This field is for the daily cost of this pool. Chef Chicken get paid monthly salary of 2,400, that is 80 Egyptian pound in each COP, in each day. This pool limits to 480 working minutes per day, assuming this restaurant works 8 working hours. End-to-end database are the ultimate products to the customer, linked to their direct cost pools or the unit level cost pools. Our restaurant has 3 end-to-end products. They are chicken paneer, steak mushroom, and fries. These 3 products are only our products in this example. Each chicken paneer unit requires 7 minutes to cycle from the chef chicken. That is the independent driver quantity. It means the chef works in one chicken paneer order only, but in real life, the chef can work in 4 orders simultaneously. Therefore, the simultaneous driver quantity is 7 by 4, that is equal to 1.75 minutes only are required for each chicken paneer unit. The chicken paneer dish requires 200 grams weight of chicken and 50 grams of corn oil and 50 grams of flour. The final cost after activity-based costing calculation that will be coming later in this video is 22.29 Egyptian pound. After we put our markup, our profit margin, we will sell our chicken paneer dish for 32 Egyptian pound. This is our selling price. The same concepts are applied for the other 2 products in our end-to-end database. The shared cost database contains our selling and general and admin functions, the SGA. After activity analysis for the selling and general and admin functions, the below is the interdepartmental cost between them For example, chicken meat should be charged with its share of the purchasing department cost because the chicken meat took from the purchasing department time. How we can allocate purchasing department cost to chicken meat? We link the cost pool chicken meat with the cost driver of the purchasing department. The allocated cost driver is minutes to purchasing. Minutes to purchasing is the cost driver of the purchasing department. We make this link between what will be charged and the cost to be charged. Allocated driver quantity is quarter of minute. That means for every kilogram of a chicken meat purchased, quarter of minute, it means 15 seconds, consumed from the capacity of the purchasing department, and so on for the other cost pool. Another example for the CS. The customer service officer, as he works in PC, he uses the IT service. The cost pool of CS will be linked with the gigabyte data handled to be charged with its share of IT department cost. You will go through all these details in the Excel sheet at your ease. I'll attach this Excel sheet with my video. This is the COP table. Close of business table, building the cost relationships resulting from the sales today. Those are 80 invoices. This is the branch who sold. This is the customer who purchased. These are the three products. The first part of cost relationships is for the unit level and batch level cost. Those are allocated to invoices based on activity-based costing, that is including selling cost such as pilot and delivery vehicle. Note, as per IFRS, the International Financial Reporting Standard, selling costs are excluded from cost of goods manufacturing calculations. But as per activity-based costing methodology, or unit level and batch level costs are in cost of goods manufacturing calculation, even they are selling costs. That is one of the obvious difference between the managerial accounting and financial accounting. The cost pools in this first part includes all unit level and batch level cost, each with its cost driver, and in each cell there is a consumption of each invoice from this cost driver. For example, the customer C2 ordered 1 steak mushroom that requires 3 minutes to cycle from the chef meat, and he ordered 3 chicken paneer that require 5.25 minutes to cycle from the chef and chicken, and so on for all the other ingredients. The customer service officer regarding this invoice took 3 orders, 3 kind of requests from the customer. Regarding the Kanban system, the screen in which the customer service delivers the request to the kitchen, this invoice appeared on Kanban system screen for 5.25 minutes. That is the maximum time of the 3 chefs, and because this invoice is served in the restaurant, there is no pilot or vehicle or backing. Now we are going to build our activity-based costing main matrix. Our matrix will be square. The unit level, the batch level, shared cost, and invoices are the rows, and they are also the columns in same time. The columns headers are the provider's cost object, while the rows are the served cost object. Here is a guide to how to fill the matrix. If the provider is a unit level or batch level cost and the served object is not an invoice, that is all this area, cost allocation of these 2 types of unit level and batch level cost is only for the invoices. So all these area are 0. No unit level or batch level cost are provide service to themselves, to other than invoices. That is the first rule. Provider is unit level or batch level cost and served is not invoices. If true, 0 cost relation. If no, we will go to the second step. If the provider is a shared cost pool, the cost that serve others cost pool, and served type is an invoice, that is this area. Shared level cost are serve all the other cost pool but not the invoices. Now, how we can fill this cost relationships between the shared level cost and other cost object? We will go to the second part of our COP database. We created cost relationships between the cost pool that will be charged and the cost driver of the source cost. For example, to allocate HR fixed cost to the chef meat, we build a cost relationship that is called chef meat heads count. because heads count is the cost driver of the HR fixed cost. The three shifts build that cost relationship with HR fixed cost. The ingredient material build cost relationship with minutes to purchase, to be charged with their share of purchasing department cost. CS, customer service, build the cost relationship with gigabyte data handled, to be charged with IT department cost. Also, customer service build the relationship with head count, to be charged with his share from HR department cost. Kanban system build the relationship with minutes to purchase, with gigabyte data handled, to be allocated with a share of IT cost. Packing bag builds cost relationship with minutes to purchase, to be allocated with a share of purchasing cost. Cleaning material build the cost relationship with minutes to purchase. Pilot, our delivery man, builds cost relationship with heads to count and minutes to HR, to be allocated with a share of HR fixed cost and HR variable cost respectively. Delivery vehicle build the cost relationship with minutes to purchase. Purchases department itself build the cost relationship with gigabyte data handled, head count, and minutes to HR of IT, HR fixed cost, and HR variable cost respectively. IT build the cost relationship with heads count and minutes to HR. Both of HR fixed cost and variable cost build the cost relationship with gigabyte data handled, to be charged with IT cost. Returning to our activity-based cost matrix, these are the cost allocation for the shared department cost we built from the COP database. After using matrix algebra to resolve this cost pool mutual allocation, that process is so-called the reciprocal allocation method. We finally reach the activity-based costing result. The column pool price is what we actually cash out. That is our cash flow we paid. For example, chef meat is being paid 90 Egyptian pound in each COP, and after using our reciprocal allocation method, this cost pool, the chef meat, cost us 95.34 because this cost pool is charged with other cost allocation. This 5.34 pound, his share from HR fixed cost, and so on for all cost pool. These are the cash outflow that we actually paid, while this amount are the activity-based costs that will be charged to the customers based on the invoices consumption of each of these cost pools. Total what we paid is this number. Total the activity-based cost is this number. There is a difference. Is an amount will be allocated to the business itself, to our restaurant itself. It means facilities level or corporate level cost, not on our customer. It is not fair to be allocated to our customer. These differences has many stories about our inefficient usage of our resources, or what is so-called idle capacity. For example, for our chef meat, as per our activity-based cost metrics, the total consumption of this type of labor was about 49%. That means about 51% of this resource is not exploited. We didn't benefit from the chef meat for 55% of his time. That is an idle capacity of this resource. This is reflected here. There is an idle capacity for the chef meat for this amount as idle capacity without enough demand to cover, and so on for all the labor of fixed cost pools, like the chefs, the CS, the pilot, the staff in purchases, IT, HR, and so on. Sales by product table for the COP sales for each product to each customer. Now we are going for the activity-based costing income statement. As per IFRS, International Financial Reporting Standard, traditional income statement started with revenue and extract the cost of goods sold to reach the gross profit. But in activity-based costing income statement, we start also with revenue and extracted cost of goods sold that is charged to the customer. This cost of goods sold consists of three parts: prime cost, overhead cost, and SGA. Selling and general and admin, those are allocated to the customer. That treatment of SGA is the main difference between the income statement under activity-based costing and the income statement under IFRS. Because under IFRS, SGA costs are not included in cost of goods sold. Under activity-based costing income statement, we reach the activity-based costing profit from customers and dividing this amount by the revenue results to reach the activity-based costing ROI, return on investment, on customers. Then we extract the idle resources, the idle capacity, to finally reach the net operating profit. Now we go for the bit sales calculations. The cash we can return back to our customer as marketing gift to maintain their loyalty and more sales in future. Bit sales calculation based on three figures. First, what is the budget hurdle rate or the required rate of return on our business? In this example, it is 12%. Second, the estimated inflation that we want the customer profitability to exceed to ensure the customer has a real profitability. In this example, it is 5%. Estimated inflation rate. Third figure is the inventory turnover. It means how many times the inventory was sold to the customers, or how many times the customers purchase from our business, or how many times the customer attended to our restaurant. Inventory turnover is dividing activity-based cost from beginning of the year till date. That's accumulated amount from beginning of the year till date. We divide it by the average of inventory of finished goods for 2 working days. This scope, finished goods, and the previous scope, finished goods. We reach our inventory turnover. On average, 8.46 times for the customer C1 after adjusting his cost of goods sold by the budgeted hurdle rate and the estimated inflation rate and deduct that adjusted cost from his revenue, the profitability left will be 85.16. We will dividing this amount by the customer inventory turnover. By his about 8 times visit to us, we can return cash back to him about £10, and every day we will readjust this bit sales calculations to all customers.